What looked like a mild start only got worse, given that we managed to close in at the session lows, and at the day's lows we were down in excess of 200 points. But still on closing bell, 180-point downtick coming in for the Nifty futures. So at the 70,250 is where we've shut shop for the day. A good 1% decline is what we've seen. Similar was the case with the broader end of the market as well. A mildly positive start, and then we changed hands with 119 stocks going home as losers, with 71 to the declines. The pressure was coming in from really all corners, but before anything else, I must mark what the global setup was looking like, because when we came into trade, it was largely a mixed bag of sorts. You did have Japan, Hong Kong, which were markets in focus and were trailing in the red. But intraday, most of those markets actually managed to recover and close in at session highs. So it's a 1% uptick that you saw for Japan. Even Hong Kong, which bled for the better part of trade today because of DDD listing, that actually saw quite a bit of recovery coming in and finally closed in flat for itself. European markets as well had a mildly positive start, and even when we were winding up for trade, you had US futures as well indicating a flat start with a positive bias. So that said, we have been the global underperformers once again. The FI selling continues. Even yesterday when we had a massive up day, the FI selling continued, although the quantum of selling is definitely receding. So in case there is a silver lining to the cloud, this is it really. But today, talking about the pressure points, Reliance closed in lower by 2.5%. Given its weightage on the index, there was really no hiding place then. You also had Asian Paints, which was down 2.5%, Kotak Bank, which is down 2.25%, Bharti was down 2%, ITC, Maruti, these were all stocks which were weighing heavy on the benchmark indexes. Even within the broader markets, Gujarat Gas with a 4% cut, India Mart with a 3% dip, Apollo Hospitals with a 3% dip coming in. So even the broader markets were weighing heavy. That said, handful of gainers, and one must point that out as well. UPL, BPCL, IOC, ONGC, IndusInd Bank were relative outperformers in trade. UPL held out by roughly about 2% in trade. From amidst the broader markets, that's where all the fancied ones were, because you had an idea clocking a 52-week high for itself. It's already trading now above the 14 rupees per share mark. It's a 12% gain that idea closed the day with. Indian Hotels saw a dead cat bounce, as was the case with PVR. Remember, both of them part of the reopened trade, and that really got challenged ever since the Omicron news really came about. Deepak Nitrite, GMR Infrastructure as well were some of the other gainers in trade. To the newsmakers then, and all eyes were really on Z, given that reports indicating that Z and Sony are set to sign a binding merger agreement. So that was definitely one stock which was in focus. There was Biocon, which got an approval for Mycop drug. There was JSW Steel as well, which announced a price cut this time around of 2,500 rupees per ton. And then M&M Finance, which reported a healthy disbursement figure. These were a couple of stocks which were in focus in today's trading session. But next week as well, the activity is going to get hectic. You have the MPC as well meeting. The outcome is going to be extremely important given the backdrop of the Omicron variant now spreading pretty fast across the globe. And what the RBI really has to say about inflation and the following growth trajectory, that's going to be, I guess, of critical importance as well.